Dive right into the whirlwind of recent economic events where the unexpected is the new normal. We find ourselves in a world where the Bank of England's chief economist Hugh Pill contemplates a near-term rate cut. This decision might seem like a breath of fresh air, a beacon of hope for many who've been battling economic headwinds. But let's not get ahead of ourselves. The year 2023 was marked by anticipation for a more relaxed monetary policy from the bank. The market was buzzing, investors were on edge, and stocks were poised for a leap. But as we've come to learn, the economy is anything but predictable. As we moved into 2024, the excitement started to wane. The once vibrant optimism began to fade, like the last rays of a setting sun. The market's enthusiasm for a looser monetary policy started to ebb away, leaving in its wake a trail of muted stock performance. The promise of a rate cut, once a powerful catalyst, now seemed to lose its potency. It's like being on a roller coaster ride, with its ups and downs, twists and turns. One moment you're soaring high, the next you're plunging into a dizzying descent. Just when you think you've got a handle on things, the economy throws a curveball your way. But that's the beauty of it, isn't it? The unpredictability, the thrill, the suspense. It's what makes this economic landscape so intriguing, so captivating. It's a game of chess where every move counts, every decision matters. As we can see, the economy's rollercoaster ride is far from over, so fasten your seatbelts, folks. It's going to be a bumpy ride. Switching gears, let's take a look at the world of the ultra-rich. Amidst the ups and downs of the global economy, the extravagant lifestyle of the wealthy often stands out in stark contrast. Take, for instance, the recent pre-wedding party hosted by Mukesh Ambani for his son. A star-studded affair that gathered notable figures from across the globe, defying the gloomy economic backdrop. While most of us are adjusting our financial forecasts and grappling with the potential impact of the Bank of England's stance on a near-term rate cut, the rich and famous are living it up in a world seemingly untouched by economic concerns. It's a sharp contrast, isn't it? On one hand, the world is buzzing with market excitement for looser monetary policy, and on the other, the ultra-rich are throwing opulent parties that could rival the GDP of some nations. The disparity is as intriguing as it is frustrating. But it's also a reminder that wealth is not evenly distributed, and economic turbulence impacts different segments of society in different ways. It seems that no economic turbulence can dampen the spirits of the ultra-rich. From the tangible to the intangible, let's explore the fascinating world of cryptocurrency. In an interesting twist of events, Bitcoin, the titan of the crypto market, has hit an all-time high. This surge in value has been largely driven by the approval of US-listed Bitcoin exchange-traded funds, or ETFs for short. Now let's delve into what this means. For the uninitiated, an ETF is a type of investment fund and exchange-traded product traded on stock exchanges. Bitcoin ETFs allow investors to dip their toes into the realm of cryptocurrency without the complexities of buying and storing digital assets themselves. The approval of these ETFs marks a significant milestone, signaling acceptance and recognition of cryptocurrency in the traditional financial market. But what does this mean for the economy and investors? Well, it's a double-edged sword. On one hand, this could potentially open the floodgates for institutional investors and hedge funds, injecting a fresh influx of capital into the crypto market. On the other hand, the volatile nature of cryptocurrencies could pose potential risks. With Bitcoin reaching new heights, it's clear that cryptocurrency is changing the financial landscape. From the west to the east, let's delve into the economic situation in Japan. The land of the rising sun has been on quite an economic journey. Recently, the Nikkei 225, Japan's premier stock index, has reached record highs. It's been outperforming many of its global counterparts, demonstrating a level of resilience in the face of global economic uncertainty. However, this isn't happening in a vacuum. The Bank of Japan has maintained a loose monetary policy, pumping money into the economy to stimulate growth. This policy, sometimes referred to as easy money, is a double-edged sword. It can spur economic activity, but it also carries the risk of inflation and the creation of economic bubbles. Now, there's chatter about the Bank of Japan possibly raising interest rates. This move could be a response to fears of inflation or an attempt to cool off an overheated economy. But it's a delicate balancing act. Raise rates too quickly and it could send shockwaves through the economy. Raise them too slowly and inflation could take hold. While the Nikkei's performance and the monetary policy debates grab headlines, there's a quieter concern lurking in the background. Some economists are warning of a possible second lost decade for Japan. The first lost decade was a period of economic stagnation in the 1990s, marked by low growth and deflation. The spectre of a second lost decade hangs over Japan, threatening living standards and economic prosperity. Indeed, without careful intervention and prudent economic management, Japan could find itself in a challenging predicament. The country faces not just the potential for economic stagnation, but also a rapidly aging population and a shrinking workforce. So, while the Nikkei soars and economic debates rage on, remember that the true measure of an economy's health is not just its stock market performance or its monetary policy. It's also how well it serves its people, how it manages its challenges, and how it plans for its future. It seems that Japan's economy is teetering on the edge of a precipice. As we wrap up our tour of recent economic events, there's one more thing to do. It's crucial to stay on top of these ever-changing dynamics, and what better way than to subscribe to this channel? Here you'll find a wealth of informative content designed to keep you in the know, whether it's the Bank of England's stance on rate cuts or the impact of cryptocurrency highs. We've got you covered. Remember, the more you know, the better decisions you can make. Subscribe now and never miss an update.